good afternoon, and welcome to this week's edition of The Last Word. I'm your host, Paul Sanger. It's the end of another week, and as usual, I'm joined by Chris Gosling from Australian Fund Monitors to review the past week and peer into the future to see what might possibly be happening next week. Chris, welcome.
Thank you, Paul.
Another busy week in the markets, Chris, and let's go through some of the sort of the key highlights. And let's start, with the US. Obviously, there's been plenty going on there. We've had the July FOMC minutes came out this week. Some revision to the jobs data. Didn't offer a lot of surprises to be honest, and kind of saying that inflation is under control over there. What I am keen to talk about is now traders are pricing in 100% chance that the Fed's going to cut rates in September by 25 basis points. Some are even saying there could be 50 basis points. And there is disconnect between the traders. This year, they're pricing in 100 basis points of cuts, and the Fed's nowhere near that at the moment. So keen to hear your views.
So as you say, Paul, almost a certainty. I don't think anyone's saying that rates won't fall in September. The big debate is it going to be 50 bips or 25 bips? And then what's beyond September? So, as you say, 100 basis points, pretty well written into the market by Christmas.
Yeah.
But will it be more than that? It really depends to what degree is the economy slowing, and will it have that wonderful Goldilocks soft landing, which is in fact really difficult to achieve. So can you bring rates off? Have they kept rates high enough for long enough, or have they put them too high? We'll wait and see, and that's peering into the future. But there's certainly going to be a rate cut in September. The question is how much?
Yeah, absolutely. And as a consequence of that rate cut, we've seen the US dollar this week hit its lowest point of the year, which we probably we would have expected. Other news in the US, obviously been a lot going on at the DNC convention. Early in the week, Kamala Harris came out and announced that she would plan to increase the US corporate tax rate to 28% if she wins the White House in November. But as you and I know, no certainties there. It's going to be a pretty close race, no?
Well, it'll be a pretty close race in the 6 states that really matter, the so-called swing states. Kamala Harris is really sort of on the ascendancy. I mean, it's just extraordinary, the turnaround over the last few weeks since Joe Biden stood down, handed over. But the amazing thing about the Democratic Convention is the amount of hoopla by Australian standards. I mean, this goes for 4 days. You've got Oprah Winfrey, you've got
Bill Clinton, Obama, Michelle Obama.
This is sort of this is the Gold Logies or the Oscars for 4 days. It's extraordinary, almost to the extent that the projected or the announced rising corporate tax has almost sort of been drowned out. Tonight will be the key to that, and then we'll move on to the real election hearings. We still think, and we've talked about this before, it'll depend on turnout for the day.
Yeah.
But I think that's why the Democrats are so much more excited than they were, and Trump is less excited. He's certainly not enjoying the other side of it. He's not enjoying not being the centre of attraction at all. His tan's almost fading. He'll have to reapply it. But yeah, the turnout on the day. So the Democrats are re-energised, and if that affects the turnout, which it almost certainly will, then in those 6 swing states, that'll be the key.
Yeah, okay. And just finishing up with the states, our markets will be closed, but the big chat about the Fed's annual conference on Friday at Jackson Hole. Do we anticipate any surprises from the chairman, Jeremy Powell? In previous years, it's been a bit of a non-event. Do you think any different this year?
I would have thought there won't be any surprises. Everyone will be hanging on that. He will indicate that inflation's going in the right direction. he will. It's very unlikely he'll make any wild statements. He won't want to rattle the markets. Saw what rattling the markets did a few weeks ago.
Absolutely.
So
let's talk about the domestic on the domestic front. Now, it's interesting. The Reserve Bank of Australia did contemplate raising rates. The minutes came out this week, but obviously, opted to keep them unchanged. And the central bank's decision was influenced by concerns about potential rate hikes on inflation, the broader economy. What I want to talk about, though, is the Reserve Bank's decision to lower the official cash rate last week. 3 of the 4 of the major banks then announced cuts to some of their fixed mortgage rates and term deposit rates. What's the messaging there? What do we read into that, Chris?
Well, we spoke earlier today with Nick Chaplin from Seed Funds Management, and his view is that this is the banks adjusting their own balance sheets and making sure they're getting deposits in, or possibly not getting deposits in because they don't necessarily need the money on the balance sheet. The real key is that it happened independently of the Reserve Bank moving. That's unusual.
Yep.
It was across the board, 3 of the big 4 banks, but a whole range of smaller banks as well. There's a real tussle going on between the market and the RBA, not so much the market and the RBA, but the RBA and the government about what is the cause of this persistently high inflation. The RBA is absolutely adamant they're not going to cut rates until inflation comes down.
Which is interesting because the CPI number is at
3.8.
3.8, which is telling you rates aren't high enough.
Sure.
And the RBA governor, damn if she hikes the rates, damn if she cuts the rates, but leaves them unchanged is not a great scenario either. Yeah.
Sure. We've got the CPI numbers out next Wednesday, so that'll be really important. If they don't fall significantly, which is not expected,
no.
Let's say they stay around that 3.8, 3.94%. then the Reserve Bank will stick to their guns. You get the impression that there's a lot of behind-the-scenes poking of the Reserve Bank from the government.
Yep.
You had Andrew Hawser, the Deputy Governor of the Reserve Bank, coming out last week basically telling market pundits to butt out and mind their own business and let the Reserve Bank do what it wanted to do or needed to do. Whether that was a message in disguise for the government or not, we don't know. But the government's trying to say they're helping inflation move down. Everyone knows that they're not actually doing that. They're helping to keep it high, either from infrastructure spending or putting more money into consumers' pockets through tax cuts or wage rises or subsidies on power. So there's a battle.
Well, watch that space, and the data is obviously that comes out will dictate what happens.
Sure.
Now, despite that sort of chatter, Australian share market has been on a tear. It ended higher for the 10th straight session on Thursday, and that's the longest winning streak since December 2015. Market's not closed today, but I think based on what the US did last night, there's a good chance the market does close down to today. So that's been pretty interesting. M&A this week, a huge M&A deal. Global convenience store giant Japan 7-Eleven reported a $31 billion takeover from Canada's convenience store giant Alimentation Couche-Tard. Interesting there, Japanese don't like foreigners, stepping their toes into Japan, and there's already noise that there's some antitrust sort of scrutiny going on, but a pretty big deal, and the French having a crack at the Japanese. I haven't seen that before.
We haven't seen the end of that one. It'll be interesting to see what happens.
No, absolutely. And then commodities. There's been certainly from my perspective, the two highlights that I've seen this week is that earlier this week, gold price hit a record high. I think of 2,531 per troy an ounce. Data also came out from I think it was the World Gold Council, highlighted the holdings of physically backed gold ETFs rose by 19.4 tonnes, which is equivalent to about 7.3 billion. Net inflows have been positive in 7 of the past 8 weeks, so people seem to be piling into gold. couple of reasons given for that, Chris. The US and European buyers are positioning for obviously lower borrowing costs, and obviously lower borrowing costs tend to boost the attractiveness of gold, which carries no yield relative to assets such as bonds. And also very strong demand from India in recent weeks, and that's around the traditional buying for the Diwali festival. And then there was also a cut in import duties. So a couple of the reasons why that the gold has gone for a tear, and a lot of people still think that there's it's going to go high, which is great for Australia and all those gold exploration companies.
Sure, I think it says great things for Australia. Less so on the iron ore front, if you're talking commodities.
Well, no, absolutely. And iron ore, this week crashed to its lowest level in around 2 years, to about $92 a tonne. That's below the $100 a tonne, which they say is the sort of threshold where high cost production starts to become unprofitable. It's tumbled by more than a third this year alone. And another interesting stat, it's wiped off approximately $100 billion in market value from the big four, BHP, Rio, Vale and Fortescue. So pretty worrying. And the driving factor, people is China. The Chinese economy, the crisis going in the property sector is clearly having an impact, and likely to continue to have an impact now.
Sure, absolutely. The Chinese economy is sluggish, to say the least. The Chinese consumer, and we talked about this last week, the Chinese consumer is very conservative. They've pulled their heads right in. Chinese are doing whatever they can to stimulate the economy, but that property sector, which has been overcooked for so long, everyone knew it was overcooked, but it's like all bubbles, it sort of kept going for longer than one would expect it to. The only good thing, the saving grace for Australian iron ore producers is their cost of production is incredibly low.
Yeah, around $30 the
Sure. So it's going to cause some problems because they're not as profitable. It'll cause some problems for the government,
particularly the WA.
Sure. So it's not great news, but overall that Chinese economy should be helping that sort of deflationary or reducing the inflation effort or pressure, which is helping in the US as well.
Let's talk about the WA government. For years, their coffers have been filled by the royalties and profits that they made from iron ore. It looks like that cycle has changed. A few people have been angling at uranium. Obviously, there's been a lot of debate globally about nuclear power being critical in the energy transition. Do you think they're not getting as much money from iron ore? They reconsider the uranium ban in WA?
Oh, well, they might do, but that's a political hot potato. And the federal government, Lionel Bowen is absolutely adamant that uranium is not on, or nuclear. Is not on the agenda in Australia, except of course in our submarines. So there's a slight sort of hang on, left hand doesn't know what the right hand's doing, or isn't prepared to admit they know what the right hand is doing. But yeah, look, it could be, but it's a real hot potato politically.
We will see.
We'll see. And we're really the only country in the world, particularly one that produces or has reserves of 30 or 35% of the world's uranium, that doesn't use the stuff.
Well, that debate will continue. And Chris, looking into next week, what are the key things you're looking at that will influence the markets?
CPI data.
CPI data.
Absolutely. That's basically it. We're getting towards the end of reporting season.
Yeah.
So I think all eyes on the CPI data, and that'll get the pundits going on what the RBA should be doing, much to the chagrin of the RBA themselves, who want to be left alone and make their own decisions.
Absolutely. Well, that's all we have time for on the last word. Chris, as always, absolute pleasure, and we will be back next Friday with another edition of The Last Word. Have a great weekend.
Thanks, Paul.